You're a sports card business owner and you don't understand what your tax preparer did when they filed your taxes and you feel like you paid too much on your business. Or maybe you're do-it-yourself, you filed your own taxes with a tax software, but it was intimidating and you weren't sure how to go through the Schedule C as a sole proprietor. I'm going to walk through the Schedule C and show you how to maximize your deductions. I'm Jonny Petrucco, an IRS enrolled agent, and we're going to fill out the Schedule C profit and loss for businesses. Now, maybe you have a W-2 job and this is something you do on the side. You're selling sports cards, or you've made the jump. Amazing. You have your own eBay store, whatnot store, your breaker. Maybe you have a retail store. And so as a business, you need to report all of that 1099 income along with other income for sales that you've made. But when you report all that income, we need to know the best deductions to make. And there's some deductions that people don't include, and they really should. This video will be most relevant for those making maybe less than $50,000 in profit. Once you're making more than that, you should strongly consider switching to an S corporation. There's a lot of factors here depending on the state that you live in, the future profitability of your business. But for this purpose today, if this is something you do on the side or your business has $20,000, $50,000 profit left over for you, you definitely want to do a Schedule C, and I'll show you how we can maximize those deductions. Okay, let me switch screens and jump into it. Here we have the Schedule C profit or loss from business. Now, look at my previous video on the 1040. One of the lines on the 2-pager of the 1040 is your profit and loss from business, and that flows into there for your total taxable income. That number is going to be down here, and I'll show you how we got to this $35,000. Now, $250,000 in gross receipts. We do not pay tax on all of the 1099 income or sales that you made. That would put you too high of a tax bracket, so we got all these deductions to get us down to this point here, and I'll show you how we did that. But first, again, we have our Joe Schmo, and here principal, business, or profession, sports cards and collectibles. Now, I put this here because where it says enter code from instructions, I think the two best codes that we can choose are either this one here, all other miscellaneous retailers, or it could fall under this hobby, toy, and game retailers. I just picked the miscellaneous for now. It really doesn't matter. That's close enough. And then your business name, Joe's Cards, and the address. I live in Gainesville. Okay, and the accounting method is cash basis, should always be the case for these kind of businesses. Yes, we materially participate. If you started it in 2024, we'll say we've had this prior to that. Did you make any payments that would require Form 1099? Now, technically, if you have consignments, then you're supposed to send a 1099 to the consignee for over $600. Or if you had a contract labor, then you should do that. Actually, I did have contract labor here, so I'm going to say we did need to do it, and then we did file it. Then we have the sales for the year. Now, this is going to be pulled from your dashboard on eBay, whatnot, and then your bank account for Zelle, PayPal, from the card shows, and from breaks. So all your income goes there. And then any returns, this will be in the report as well. Say it's $5,000. All right, our net sales will be $245,000. Cost of goods. This is a big one. Let's scroll down to line 42. Here we have cost of goods sold. Always going to do the cost method. And then there will be two ways you can do inventory. There's like a cash method, which is a kind of a cheat way that was introduced with the 2018 Trump Act. Or you can do the traditional way with beginning inventory plus purchases minus ending inventory equals your cost of goods. So we're going to do the easy way for now. And this is not recommended for growing businesses because it messes up the reporting. We're basically saying all of our purchases for the year will be our cost of goods sold. So this means at the end of the year, you can buy a lot more inventory, although that will reduce your taxable income for this year. For next year, when you sell that inventory, you won't be able to write off the inventory that you paid for in that previous year. So in this case, we have a 0 beginning inventory and 0 ending inventory. Now, a more proper way to do it is to estimate the cost. If you have a spreadsheet or if you have some way to estimate, then you take whatever that inventory at the end of the year is, say it's $30,000, and then we do need to adjust the cost of goods sold. So that would be like $45,000. But for now, let's just keep this here, and for the example, it'll be a little easier. Now, technically for other costs, this is where you could add grading, PSA, JSA grading fees, but you'll see I put that in another location for now, but that technically does add to the cost basis of your cards. So we do have 75 here, and this is our gross profit. And now we have our operating expenses. All of these, this is from your credit card, your bank account. And if you should have some kind of bookkeeping system, or at least just download a spreadsheet and categorize all of those expenses. Now for advertising, there's print and there's digital advertising. So I just put all these numbers as an example. And by the way, when you're filling this out, or if I fill this out for someone, I'm not going to put estimated numbers. If I didn't exactly know, I might do something like this. You don't want to put round numbers generally. Now, again, I'm a tax advisor, but I'm not your tax advisor. So please don't take my information. It's just for informational purposes, but do your best to get the exact number. Just also keep that in mind. If you do round numbers, it kind of doesn't look right. Now, this one, the car and truck expenses, this is based off of, there is a 67 cents per mile that you can deduct. So I just put, say there's 5,000 business miles, and then you multiply that by 67 cents. That detail is down here. When did you place your vehicle in a service? How many miles did you drive? 5,000. And then this is important. Do you have evidence to support your deduction? If yes, is the evidence written? Be honest and use our conscience, but there are apps like Mile IQ. They make it really easy to track your mileage log if you don't have something written or in your notepad, but you definitely want to have some evidence to support the date, the location, the purpose, and the number of miles that were driven. Now, this can be going to the post office every day. On average, say it's 5 miles back and forth to get there to drop off shipping, or you're going to a card show, or you're going to some other kind of event. Contract laborers, this is if you're paying someone a 1099, they're not an employee. They're sorting cards for you or helping you ship and pack. Insurance, this could be collectibles insurance or business insurance. Legal and professional services, accounting fees, or any kind of lawyer fees. Yeah, office, this could be like furniture or paper and ink and basic things like that. You could also include software costs for QuickBooks or for Card Ladder, things like that in here. And then supplies. So these could be your card supplies or shipping supplies, taxes and licenses. So because I have someone here on payroll, I included payroll taxes in here, which is about 8% of the total wage. And then I included annual filing report and other things like that. Travel, this is hotels and flights, not mileage, because that's going to be over here. Not food, because food will be right here. But this is, mainly to card shows and meeting people for deals. Now, deductible meals. This implies that there was $2,000 of business meals. Only 50% is deductible. So I put 1,000 here. And this is anytime you're on the road for business, you can deduct meals, or if you meet with clients or talk business. So technically you should document that as well, just in case. Utilities, this could be your phone bill. And then if you had a shop, then we would go over here and put some rent in there for other business property rent, $10,000 for the year. And then you would add the electricity and water and sewage and all that. But this account that Joe's cards we're assuming is just a home office kind of thing, and that'll come in a moment. Then we have I just said he's got like a salaried person. By the way, this contract labor, if you're hiring your child under 18 years old, you don't have to pay payroll tax on them, and that can be if they're under the standard deduction, then they don't have to pay taxes on that. So that there's really a good hack paying your children to work in your business. Other expenses, a lot of it does fall under here, but I like to be detailed. And you see, I've filled out a number of these boxes. Now, if you're going to file this and just put in 1 or 2 boxes, it just doesn't look like you really did your numbers accurately. So it's good to kind of spread this out. And then even adding these other expenses, in this case, I put eBay fees, which is about like 15% of sales, a portion of sales, and eBay shipping, whatnot fees. And I put grading fees, PSA, JSA here. It could go under cost of goods, but that's here for now. All right, the total operating expenses, 129. So we take 170 minus 129. That gives us 40,000. And if this was a negative number, it's okay. I mean, your first year, 2 years of business, you're going to have a loss. But if this is like the 3rd year, 4th year in a row, having a loss, you're in danger for being reclassified to a hobby. But at any rate, if you were in a loss, then you can't deduct the home office, because this is the next one. expenses of business use for your home. Attach Form 8829. This is for the actual method. That takes a percentage of your house and then it multiplies by rent plus utilities or mortgage interest plus utilities if you own the house and depreciation. You could do a simplified method, which will be $5 per square footage. If you have 300 square feet of office, then you can put $1,500 in here. But with your home office, you can have your actual working space where you print labels and work on your computer and then store your inventory. So in that case, it could be, in this example, I was saying for rent and utilities for the year, you multiply that by 20%, and that's how I get $6,000. But the proof of that will be Form 8829 to show the backing. Now we got to our end. So we are at $35,000 of taxable income. So you have $35,000. That will be the taxable income. This will flow through. You will pay the self-employment tax on this, but this is much better than what we had as sales before. And there are some other deductions that I could put in here, and I could talk with you if you need some help doing this. I can would be happy to consult with you and try to get the max deductions possible. But here's just a rough example of how it all works. Well, thanks for watching. And at Sports Card Tax Guy, we're always helping our clients trade their IRS stress for financial success. I'll talk to you soon. Please reach out if you need anything. I am happy to assist and have a call with you.